Hey everyone, this is Kirk here again at OptionAlpha.com. I wanted to go over one of the trades that I made here at the end of the day on Apple. So Apple already had their earnings after the close this evening on Monday. Wasn't too good as far as guidance is concerned. Their guidance for the end of the year and for holiday sales was a little bit below par. So Apple stock is actually taking it a little bit on the chin here in after hours trading. But I want to go over why I made this Iron Condor trade. And this is the actual alert that I sent out to members. And you can see it's already time stamped 304. So I made this trade about an hour before the market closed. And what I actually did was sold an Iron Condor and Apple for November. So November is still very close as far as expiration. There's only 18 days to go in this contract month. And what I did is I sold a 185, 190 call spread, and then also coupled that with a 480, 475 put spread. So the total credit that I took in was $1.06 on the whole contract as a whole. So again, our risk is about $400. We're taking in about $100 worth of profit. So it's a very good equal distribution for the type of trade that we're doing as far as risk and reward. So if I actually go to Apple here and I'll bring out the highlighter, you can see that Apple here closed up on the day just a couple dollars, closed about 530 or so. And you can see down here on the platform that earnings are right here on the same day after the close. Now, the reason I decided with this earnings play to go after the Iron Condor versus something else like a straddle that we had posted about earlier in the week in the blog is because implied volatility on Apple has been so high recently, and that's all the way down here. So implied volatility in Apple has been steadily rising ever since about the first couple weeks of August here. And since implied volatility is so high, and we know that after earnings, we tend to see a volatility crush. And here you can see I'm highlighting it in July. Same thing happened back here in April. Volatility got crushed after earnings. That's what I'm really expecting. I'm expecting Apple, regardless of where it opens tomorrow, if it gaps up or down, that volatility gets crushed and these premiums contract so that I make a profit on this trade. Again, I only sold it for $1 credit total, so I'm only looking to make at most $1 if it goes all the way to expiration. In all likelihood, Apple's going to open right around 520, 525 or so. That's where it's trading right now. I'll actually go to the actual trade tab so you can see where Apple's trading right now. But Apple in after hours trading is trading right now around 525. Again, it closed at 529. So the move after hours was not substantial. It didn't gap too far up or down. Obviously, we could have some more move in the evening, but right now it looks like my strike price is at 185, 190, or it's at 585, 590, and 480, 475 down here below are going to hold out pretty good. So should make a nice decent profit on this tomorrow and probably hold this a couple days into the expiration cycle, but probably not all the way to expiration. So hopefully that was a good example of how to trade an Iron Condor, especially around earnings. And I know that a lot of you have had questions about this. So as always, if you have any additional questions, please add them to the comment section right below this video, and happy trading.